Adithya Birla Sun Life Nifty India Defense Index Fund. Will investing in this fund help you in your wealth creation journey, or will it add value to your investment portfolio? Let us find out in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this NFO will be a good fit for investment portfolio or not, let us learn some basic details about the Adithya Birla Sun Life Nifty India Defense Index Fund. So as an NFO, it opens on 9th August 2024 and it closes on 23rd August 2024. And some of its key features are it is an open-ended fund type and it has Nifty India Defense TRI as its benchmark, and it belongs to the equity thematic category, and the fund managers for this NFO are Mr. Haresh Mehta and Mr. Pranav Gupta. And the minimum application amount you need to start investing in this fund is just 500 rupees, and the risk-o-meter involved in this fund is very high. And the investment objective, the primary investment objective of this NFO is to provide returns to the investors before expenses, which closely correspond to the total returns of the securities as represented by the underlying index, subject to tracking error as it's an index fund. So now, as we have learned some basic details about the Adithya Birla Sun Life Nifty India Defense Index Fund, let's now understand a few basic details about the index it represents, which is the Nifty India Defense Index. So this index has been developed which aims to track the performance of the portfolio of stocks that broadly represent the defense theme. So from the Nifty Total Market Index, stocks which form part of the eligible basic industries or those which obtains at least 10% of revenue from the defense industry are eligible to be included in this index and are chosen based on 6-month average free float market capitalization. And the weight of the stocks in this index is based on the free float market capitalization. Stock weights are capped at 20% each. So this index can be used for a variety of purposes such as benchmarking, creation of index funds, ETFs and other structured products. And the top 10 holdings under the Nifty India Defense Index is Bharat Electronics Limited, Hindustan Aeronautics Limited, Solar Industries India Limited, Cochin Shipyard Limited, Mazagon Dock Shipbuilders Limited, Bharat Dynamics Limited, Data Patterns India Limited, Astra Microwave Products Limited, Garden Reach Shipbuilders and Engineers Limited, Zen Technologies Limited. So the highest weightage is given to the Bharat Electronics Limited by 19.38%, and the top 10 holding in this is the Zen Technologies Limited by a weightage of 3.45%. And if you look at the sector representation in this index, it has two sectors represented in it, which are the capital goods and the chemicals, and the highest weightage is given to the capital goods by a weightage of 85.59%, whereas the chemical sector gets a weightage of 14.41%, which you can refer to the index brochure for more details. Now moving on, let us take a look at the returns of this index as on 31st July 2024. So yearly it has given a return of 83.57%, and in 1 year it has given a return of 159.32%. In 5 years it has given a return of 62.65%, and since inception it has given 39.81%. So as you can see from the return graph that in a short term period of 1 to 5 years, this index has given a very good return, but you need to understand this is an index which focuses on the defense theme. So right now the defense theme or the sector might be highly performing in the market, which is why it is on a bull run and it's giving us such good returns. But there is not a guarantee that it will always perform highly like this, because this is a thematic index. So there is a possibility that later on it will not perform or underperform in the market as well. So it might not always give this much returns, and it's not guaranteed, because in a thematic fund index like this, we need to understand that it's highly unpredictable in the market, that we do not know when this theme will perform highly or not. As it's already highly unpredictable to time the market as well, it's also unpredictable to know when this theme will perform well or not in the market as well. So these returns might be because of the bull run right now, but we do not know if it will always perform like this. So this is also something you need to consider before choosing to invest in this index. So now, as we have understood and learned some basic details about this index fund as well tell us about its index. Now let's move on to analyzing whether this will be a good fit for our investment portfolio or not. How we are going to do that is by analyzing the pros and cons of investing in the Adithya Birla Sun Life Nifty India Defense Index Fund. So first of all, let's take a look at the pros. So as an advantage, this fund invests in a diversified portfolio that are likely to deliver you with long-term growth with minimal volatility, and it invests across various capitalizations. So if you compare it with an actively managed fund, the returns from this fund are relatively stable with less volatility to your investment portfolio. So suppose if you're an ultra conservative investor who doesn't want to take any kind of risk, but still if you're looking to add passive investments to your core equity portfolio, then this kind of fund might be suitable to your investment portfolio. Also, as an index fund, this fund is free from fund manager bias. So as it is managed passively, it is expected to have lower expense ratio than an actively managed mutual fund scheme. So these are some of the pros you need to understand before choosing to invest in this fund. Now let's take a look at the cons of investing in this fund as well, because just as much as the pros are important, cons are important as well, because it reveals the potential risk you might be undertaking by choosing to invest in an index fund like this. So as this fund invests predominantly in equities, it is not suitable for a short-term investment, because in a short-term period the market is highly unpredictable, where it will all of a sudden go through a period of high and lows, where you will go through a period of high return, low returns, even no returns, to a period of negative returns. So it's highly unpredictable. But if you take a look at the long-term period of 7 to 10 years, the market cycle would also get completed and will be able to give you a little bit more stable returns. But if you choose to invest in it for a short-term investment or a short-term period to achieve your short-term financial goals, then this fund might not be suitable for your investment portfolio, because it is highly risky to invest in it for a short-term period. So as an index fund, it will also underperform its index due to certain factors. Just because it is an index fund doesn't mean it will completely perfectly replicate the index. It can also underperform its index due to certain factors, and this fund will not be able to deliver you with market beating returns. As I have already said, as an index fund, it will only try to replicate the index, not be able to beat the index itself. So you cannot expect that kind of returns from an index fund like this. Also, as an index fund, based on the market outlook, it cannot change its allocation dynamically, even if the market is performing highly, or even if the market is on a crash or it needs some course corrective measures. You will not be able to change the fund allocation of this fund dynamically at all. It will only be able to replicate how the index is performing at that time, because as an index fund, they don't do any analysis of the underlying stocks and check the soundness of the company in which they are going to invest. Because as an index fund, they will only be able to look at the overall view of how the index itself is performing, rather than individual analysis of the stocks inside the index. So if you compare it with an active fund in comparison, at least it takes calculated risk by analyzing all the individual stocks and choosing only the best for their investment portfolio. So another major drawback of index fund investment is a tracking error, since it may not perfectly track its index as well. Because as an index fund, its aim is to perfectly track the index, but because of tracking error, it may not perfectly track the index as well. So as I have already said, the index fund is not flexible and will not be able to help you take any course corrective measures during the market correction or market crash period as well. So these are some of the cons or the potential risk you might be undertaking by choosing to invest in this fund, which you need to carefully consider before choosing to invest in this index fund. So what is the final takeaway? Should you invest in the Adithya Birla Sun Life Nifty India Defense Index Fund or not? Is it worth investing or not? As you can see from our analysis, this fund might be suitable for an ultra conservative investor who's not willing to take any risk and who's not willing to invest in an actively managed fund. But even then, our personal opinion is there are other similar index funds rather than this NFO, which has a lower expense ratio and a lower tracking error compared to this NFO. So if you want to invest in an index fund, you can invest in other similar index funds which have a lower expense ratio and lower tracking error compared to this one. But if you're willing to take at least a little bit of risk and you're willing to invest in actively managed funds, then you can definitely invest in actively managed funds compared to an index fund like this, because actively managed funds have the potential to deliver you higher returns than this fund. So if you're an investor who expects dynamic fund management and you're looking for investments that can beat the market itself, then you should definitely avoid investing in this fund, because as an index fund, you cannot expect dynamic fund management in an index fund, and also it will only be able to replicate how the index is performing and not able to beat the index itself. So you cannot expect market beating returns from this index fund. So you should definitely avoid investing in this fund if that's the investment objective for your investment goals. If you're still struggling with choosing to invest in this or not, or what kind of investment option will be suitable for your investment portfolio, then you can definitely consult with a financial planner, a certified financial planner who's a professional in personalizing your financial plan and crafting investment strategies especially for you, who will be able to make your entire investment journey hassle free and smooth for you and help you achieve your financial goals in a more faster and smarter way. So if you're struggling trying to understand the market, or if you do not have the time or the sufficient knowledge to understand and invest in the market, then you can definitely involve a professional like a professional financial planner who will help guide you through the entire process. So you can definitely consider investing through a professional like a finance professional as well.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.